Is Kamala Harris really coming for your unrealized capital gains? No. Well, probably not. If your net worth is over $100 million, then maybe. We'll talk about it. There is a lot of confusion going around about this plan, and for good reason. There's a lot of people lying about what it actually is, so let's break down the truth. We're going to break down the details of the plan, the potential benefits and risks, and the challenges to implementation. Okay, so before we even jump into the plan, I want to talk about just for a second what capital gains actually are. Simplest way to describe it, you have a house, you buy it for $300,000, it appreciates to $400,000, you sell it, that $100,000, that's a capital gain, and that's what you'd pay taxes on. But in this plan, we're talking about unrealized capital gains, which is, say you buy a stock for $100 and it goes up to $150 and you didn't take out the cash, you just have a stock worth $150 now. That $50 profit is your unrealized capital gain that would be taxed. But this plan only applies to you if you are worth over $100 million. So I'm assuming pretty much everyone watching isn't going to be affected by this. So don't worry, your house appreciating, she's not going to tax that. Your stock's appreciating, she's not going to tax that unless you cash it out, unless you sell the house. Don't worry about it. And that's a good segue into the plan details. So Kamala's plan is pretty straightforward. If your net worth is over $100 million, then all of your unrealized capital gains are going to be taxed at 25%. But if your net worth is under $100 million, it doesn't matter. Even if you're worth $99 million and you have unrealized capital gains of billions of dollars, that's not going to be taxed. So people who have this high net worth are going to have to start taking account for how much their real estate appreciates and how much their stock portfolio appreciates and their art and all these certain things. All of those values are going to have to be accounted for in their end of year taxes. Let's talk about the pros and cons of this idea. Let's start with the pros. The pros are this is going to bring in a good amount of money for the federal government. It's going to bring in about $360 billion over the next 10 years. That's a large sum of money and it can do a lot of good. Another benefit is that it really just handles wealth distribution a little better. It's trying to make it so the uber wealthy cannot just hide all their money from taxation and let the tax burden fall on people with less income. The main con that a lot of people on the right are going to talk about is that it's going to take away incentive for a lot of uber wealthy people to engage in the market the way that they currently do. So I think it's potentially going to change market dynamics in a way that will not benefit the wealthy. And in some ways, could that trickle down to people like you and me? Maybe, but it's all theoretical at this point. And another considerable con, which will lead us into our next section, is this is going to be very difficult to implement. It'll be hard to implement for a number of reasons, including the fact that, like this picture, the wealthy love to find ways to hide their money from taxation, and that will be no different here. Hell, we just saw Trump go through a whole trial about how he inflated and deflated the value of his properties to avoid taxation and make it benefit him. That's going to happen all the time with this plan. But it's not just this. There are true challenges with this. So like, for example, real estate is a good place to be. Finding the market value of something is a complicated process, and then applying that to an unrealized capital gain taxation, it's going to be a difficult thing to do. Art value is difficult to figure out, and there's going to be differences in valuation. So the IRS may look at it one way, while the person who owns the asset may look at it another way. So that adds a very thick layer of complexity. And in the end, the biggest barrier to implementation is Congress. Democrats, we don't know if they're going to have a majority in both the House and the Senate after this election, and Republicans, there is no way in fuck that they're passing this. This is against all of their ideals. They have no interest in a bill like this. So unless Democrats have a healthy majority, this bill doesn't stand a chance to begin with. So in the end, I understand both perspectives, and obviously as somebody who leans to the left, I understand Harris's a bit more. Harris's perspective is, let's bring in more revenue to the government so we can give better services to middle Americans, and let's also look at it from the perspective of kind of chipping away at wealth inequality in this country. I like all that. Republicans, I also understand their dynamics here, because they go, look, we don't want to change how the market operates. A lot of these people that are going to be affected are the people who kind of decide how the market goes, and it's going to be very difficult to do anyway. It's going to create a lot of additional regulation, which is something Republicans don't want. I understand that perspective as well. I do think the juice is almost worth the squeeze, but the problem is that Harris is not messaging correctly on this. She's not clarifying who this affects and that regular people aren't going to be affected. And, granted, it's not her job to clarify misinformation all the time, but she needs to be abundantly clear that this is only going to affect the upper 0.01% of people. If she can effectively do that and sell it as a means to help regular people, it's a good idea. If she can't, I think you kind of stay away from it.